Hey everyone, it's Matt Donaghue with Mission Financial Planners, and here is your weekly market recap, and more importantly, what it means for your financial strategy. We had a quiet week on the surface last week, but if you dig into the numbers, there's a lot more going on underneath, so let's break it down. First, the headline, core CPI rose just 0.2% month over month. That's a soft inflation number, especially considering that we're dealing with new tariffs that should be pushing prices higher. Retail sales were basically flat, up 0.1%, and housing starts rose 1.6%. Not exactly a boom, but not a bust either. But here's the nuance. Inflation isn't dead, it's just kind of hiding in plain sight. Most of the CPI is made up of services, and service inflation is cooling, but goods, the stuff that we actually import and slap tariffs on, are starting to show signs of heat. Core goods are rising for the first time since December of 23, and their year over year reading turned positive. So why haven't prices spiked more? Well, one, a lot of companies stockpiled ahead of the tariffs. They front loaded inventory, especially in home furnishings, chemicals, autos, and that stockpile is acting as a buffer for now. Two, producers are eating the costs. The producer price index actually dropped 0.5% last month. That's the biggest decline in 5 years. Businesses are taking hits to their margins rather than passing the cost to you. But it won't go on forever. When inventory runs low and margins get tight, that's when you'll see price hikes. The bottom line, inflation could creep up again this summer, and if fiscal stimulus hits early, that pressure only grows. That's why the Fed is staying patient and why you should stay diversified. In markets, we're seeing a rotation. Tech, consumer discretionary, and communication services led the way last week. These sectors thrive when investors believe growth is coming. On the flip side, defensive sectors like utilities, staples, and healthcare fell behind. This tells us risk appetite is starting to tick back up, at least for now. Valuations are stretched in the US and international equities are quietly outperforming as well. So if you're still all in on US large caps, now might be a good time to reconsider. Um, a quick thought for you, shifting gears to stoicism here, quick thought for you from Marcus Aurelius. Pay attention to what's in front of you, the principle, the task, or what's being portrayed. As a lot of you know, I teach a lot of Social Security classes, and all of a sudden, over the last 3 months, I've heard people say, "Oh my gosh, Social Security is a Ponzi scheme," because of what they're hearing certain people say in the news and in the media about it. It's easy to get caught up in what's next or what's already happened, but it's up to you to sift through that stuff and figure out how you're going to handle every day. Financial planning, Social Security planning is no different. Show up with intent and don't wing it. Regarding taxes and some retirement strategies, tip for farmers. If you've had to sell livestock due to drought, you might be able to defer those gains. There's real IRS relief there, but only if you act in time. And retirees, one of the big questions we get a lot is, should I leave my money in my 401k? The fees are lower. Well, you do get what you pay for because IRAs provide a lot more flexibility than 401ks. You can take penalty-free withdrawals for things like education, make qualified charitable distributions, and even aggregate RMDs across accounts. Those tools are out there, but the strategy is what turns them into results. If you haven't reviewed your portfolio or your tax strategy lately, let's talk. This isn't time to coast, it's time to plan with a purpose. Thanks for watching. I'm Matt Donaghue with Mission Financial Planners, and we will see you all again next week. Have a great week. Bye-bye.